Welcome to PhillipCapital's Weekly Market Watch. The market's recent strength has surprised many. What are the reasons behind this? How are markets going forward? Let's find out from Mr. James Chua, investment analyst from PhillipCapital Management. So James, would you like to share more with us?
Sure. I think what we've been seeing is that one of the main factors for why that's been driving the market up recently has been what we call relative return thinking. So it's the thinking that says we're not too sure about what the earnings outlook in 2010 will look like. We're not too sure how companies will expand and how they'll grow in 2010, but we're simply buying stocks because our neighbors are. And I think if you look at the market from a valuation perspective, the market has started to look expensive relative to long-term forward PEs from about 2 months back. So from that angle, it doesn't make sense to be owning stocks, but yet you still see the markets move in higher. So really what we think it is funds are afraid of being left behind, and so they have to come into the market. Going forward, we think that it is a reasonable anchor for markets to be range-bound trading based on the S&P 500 levels of 1,000 and 1,002. If you look back to 2008, these really were the levels in the market right before the Lehman crash in October. So back then people were worrying about the economic recovery. And I think that's where we're at right now, because essentially the markets have decided that we've sort of settled this matter of complete financial catastrophe. The financials are not going to blow out anymore, and then people are back to the original worrying about how the world can grow and expand from here. So 1,000 and 1,002. Between for the S&P and likewise for the rest of the global indices.
As an equity investors, how do you position for the next 12 months?
Sure. I think as an equity investor, what you want to be doing is you still want to be in markets. When you look at where markets are today from a momentum angle, from a valuation angle, and what the economic indicators around the world are showing us, signs are positive. So there's nothing to indicate that you want to be out of equities over the medium term. Over 6 to 12 months, you still want to be in the equity market, but you want to be in the equity market mitigated by safety factors. So we want to own the relatively cheaper markets. Within Asia, we do like Thailand, we like Korea, and we like Taiwan. Just from the standpoint of relative forward PEs, they look attractive at this point in time.
In this climate, what sectors can Asian investors look at?
Yeah, I mean the broad Asian investment theme really is a theme about urbanization. So we think that anyone looking at Asia, you've really got to get a good grasp for the subsectors that will benefit in an urbanization scenario. So if you look at the so-called hardware urbanization themes like steel, like property, those are pretty good themes to be in. And then there's what we call the moral and social factors of urbanization, like education, like healthcare. We think those present pretty good potential as well. Of course, the key to playing any of these stocks is a little bit to do with timing, because a lot of the government grants which are being issued and the scheduling to which a lot of these funds hit these sectors, a lot of that is very lumpy. Some of them are not don't have much visibility. So I think as an investor, your value added comes when you're able to to schedule those factors correctly and to anticipate correctly and when to own those stocks. Yeah.
Thank you, James. That's all we have for you today. Tune in next week for more market updates.